All right. Hello, 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 hello. Good morning, good afternoon, good evening. There we are. Hello, everyone. How's everyone doing? Good evening. Hello, Ricky from Austria. No, I didn't move back home. No, 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 no. You could argue this is my home. Thank you, thank you. Hello, Manuel. Hello, Siwa. Hello, Howen. Hello, Hans. Goedemorgen. Good morning from my side. Oy, oy, oy. Hello, hello, Neo. Hello, Paul. I'm doing good. I'm doing good. Thank you very much. How are you? Let's see. Let's see. Yes, it is morning. Currently, for me, it is 8 a.m. It is 8 a.m. Chris from Medellin. Love to see it, Alma. Welcome, welcome, welcome. Good morning, Black Wolf. Time for a coffee. Exactly. Yeah, yeah, yeah. Let's see. Let's see. Let's see. Which pairs consist to be traded? We can dive into that. Actually, we can dive into that. It's a good question. Good afternoon, Michael. Nice week. We'll see. We'll see. Hello, Cyrus. Good morning, Isaac. Thank you. Thank you, Abdi. Thank you. Thank you very much. 3 p.m. Belgian time. Nice. Nice, nice, nice. Hello, Milan. All right. First things first, 8 a.m. here in Texas. Likewise. Likewise. Hello, Festus. How are you? Okay. First things first. There's something I want to discuss. Well, that depends what we're going to discuss. What is the topic? What are the topics? What are we going to discuss? Feel free to give me a topic that you struggle with. Feel free to give me anything that is on your mind that is not clear, that you struggle with, whatever it might be. Feel free to suggest topics. We can dive into those topics as well, and we'll discuss them. We'll discuss them. That's horrible news, SVY. Yeah, that's insane. It's absolutely crazy. We'll also discuss the crash a little bit, but that's very tragic news. Very tragic news. So as I mentioned, a crypto trader, the suicide due to the drop. It's very tragic, and there's probably more that we are unaware of. So again, if you do struggle with any mental health problems, again, find professional help. Would be my advice. There's always a way out. Please, it's very important to understand. Two-candle rejection, overlapping PD raise. Okay. How do you define an edge? Interesting. Okay, we can dive into that. Stock market meltdown. I definitely want to dive into a little bit of the stock market, a little bit of the crypto market as well, to see what we can expect. Entries. Okay. Let's see. Area of opportunity stocks. Okay. You know what? Let's suggest the stocks after we dive into the forecast. After we're done with the forecast, then we'll go over the stocks again. Hello, Andreas. Hello. We're going to take a look, Son. We're going to take a look. We're going to take a look if we're going to take a swing trade or whatsoever. All right. How to trade for investors, also an interesting one. Okay, perfect. Let's just first dive into the forecast. Hello, Michael. And then afterwards, we'll see. We'll see which topics we're going to dive into. So I'm going to ask you again after the forecast as well. Okay, perfect. Let us see, what are we dealing with? Again, I want to discuss because last Friday, well, we saw it happening live, but I didn't really have a whole lot of thoughts about it right there. It was not part of my trading plan or anything like that, so I was not that interested in it. Now, after the fact, of course, this is large, but if we compare this, so I thought, for example, my stock portfolio was down for the day, quite heavy, and I thought, oh no, this is not great. Now, then I started looking at crypto, with all due respect, but crypto, I'm sorry to all the crypto people out there, but that was 10 times worse. Well, 10 times, maybe 80 times worse. It was a lot worse right here, the crypto crash. It was a little bit fishy. It was a little bit odd. from what I saw online as well. It was a little bit sketchy, this drop. It didn't make a whole lot of sense, etc., etc. But anyway, we can see what we're going to do and how we can potentially recover as well. Also diving into some of these stocks right here. See if they're still interesting, see if something has changed, etc., etc. We'll dive into it. First, let's just go over the economic calendar right here. Okay. So what do we see? Monday, we have a bank holiday. So that means that for Monday, I usually like to take it quite easy. I'll still keep an eye on what's happening, etc. in the market, see if potentially there is some interesting, for example, like Son mentioned, if there is a swing opportunity on a Monday, I don't really mind taking it. A bank holiday for me is really dangerous when you start looking at the lower time frame, if that makes sense. The reason why, the lower you go in time frames, the more volatility you ideally need. So if you can hold a day, for example, without really being affected, I don't, generally speaking, don't really mind it. In all honesty, for that Monday, I'll likely be mostly on the sidelines, seeing what we can do, seeing if there's anything high probability. I'll take it very easy. On Tuesday right there, we move on again to a little bit more interesting news. Fed Chair Powell speaking right there as well. Perfect. For Wednesday, we also have US dollar news right there. That looks all right. Again, the US government is still in shutdown right now. So we actually, I believe we were supposed to have CPI on Wednesday. So last week, Forex Factory here showed on Wednesday CPI and on Friday NFP. Now, if we would have had that, I wouldn't have been here. I wouldn't have been doing this forecast. I would have been gone. So, because that week would have been, well, just not ideal, if that makes sense. So right here, we don't have CPI anymore, seemingly. And the NFP for Friday right there is also not there. So I'm not sure what they're going to do with that. But again, what we currently have is Thursday, PPI right there, core retail sales. So it looks very good regarding the volatility as well. So overall, looks like quite an interesting week regarding the economic calendar. Just Monday, taking it a little bit easy right there as well. Okay, so let's see what we have. Let's see, potentially actually, when I think about it, if this is the case, we can potentially take a look at Monday as well. Tomorrow we can do a live stream as well, but we'll take a look at that later. I'll keep you updated on that. Okay, perfect. Let's take a look at the market. Let's first go over the dollar here. What have we been seeing? What can we expect? What can we do? What is happening? Etc. etc. Okay, what do we see? We see we had a large week right there to potentially continue higher. So we have simply be continuing higher. Now, what we mentioned last week is very important to understand. Because last week we mentioned these parameters, right? We had this parameter and we also had this parameter right here. So yesterday I was recording a video and I really like the example of guess who. And I'm going to mention it again for if you're not aware. I'm going to mention it again for if you're not aware. So what is important to understand is, have you ever played the game Guess Who? Let me just pull it up. Let me see if I can find it. Let me see. I think it's a perfect example when it comes to trading and finding high probability trades, etc., etc. This is the game Guess Who right here. Let me see. A very fun game, actually. I used to play it quite a lot right here. This is the game Guess Who right there. And what is the point of the game? Well, the point is that eventually you play against an opponent and your opponent has picked a character right here. So for example, does your character have blonde hair? Does your character have gray hair right there? So you start asking all these questions. And the first time that you sit in front of your opponent, all these characters are still up, like you see right here. So when you now currently make a choice, you need to make a choice. It's very low probability, right? It's very low probability that you are immediately going to guess the right person. So what you do is you ask all these questions. Does your person wear glasses? Yes, okay, then every single person that does not wear glasses, you tick them over. You're only left with Joseph, with Nick right there, with Donna, with, well, the person in the back right there. And then it becomes a lot higher probability to now choose from those people, if that makes sense. So that's how it works, essentially. Guess who? A very interesting game. Now, why do I compare this to trading? Because it's essentially the exact same thing. So when you open your chart, and you open your chart from for the dollar, for example, right here, there's many different options of what can happen. There's many different possibilities. So if you now had to choose and all of a sudden just pick one possibility that you think might happen, it's very low probability. So this is also why, for example, this forecast, again, it's not about predicting, and your forecast is never about predicting. It is about outlining all the different possibilities. Once the possibilities happen, okay, you act on it, if that makes sense. So here, we need to ask the right questions to get to what is the right possibility, if that makes sense. What is more likely to happen? So right here, that's exactly what we did last week, right? On Sunday's forecast. So if we overtake this daily fair value gap right there by running this rejection high, we can continue higher towards these targets, which is what happens. Now, that doesn't mean we were right, and well, you could argue we were right, but we just outlined the possibility, because we also outlined the possibility if we do want to continue lower and we start running this low right there. That doesn't mean we were wrong at that moment in time, if that makes sense. So that's exactly the same thing that we would want to do right here. So we need to start outlining what are the different options that can potentially happen. Okay, so if we first take a look at the weekly time frame right here, we are rejecting, for example, from a swing high right there towards the left as well. We are in a third candle right there, which is quite important to understand. Because if we are going to consolidate, we want to be very careful at that moment in time. Okay, I want to dive into the daily and more specifically into the 4-hour time frame to understand price action a little bit more clearly. We are at the end of the week rejecting from this fair value area right there. That's what we ended the week at right there. I believe we discussed that on Friday as well. Now, right here, what is important to understand is that if we want to continue higher, yes, we have a fair value gap that we might want to trade back into to then potentially continue higher from. Now, let me ask you this. If we have a lot of bearish momentum right there coming back into these daily fair value gaps, is it very likely that the fair value gap will actually hold and we will magically turn around right there to continue higher? Probably not. So for example, right here, we also had this daily fair value gap right there. That daily fair value gap, when we open up, we had large bearish momentum coming back into the fair value gap. It's quite unlikely that we then sting back into the fair value gap to magically turn around. Again, when you think of a sports car, doesn't even have to be a sports car, any car. If you go 60 miles an hour or you go 100 kilometers an hour, you're going quite fast. If you need to get to a stop, you're not going to go from 100 to 0 in 0 seconds or 1 second. No, it takes a while before you get to a full stop. The same in price action. So that's a momentum story. So for example, right here, if we have a lot of momentum, bearish momentum going against us right there, then what is important to understand, it's going to take a while before we might turn around. So this is, for example, where you might see consolidations right there before we start continuing higher again. Now, I thought about, we discussed this yesterday in the MMT's live session on Saturday. And when you really think about it, this is all about momentum. That's really all it is. So let me explain it a little more clearly. Right here, what is momentum at its core? Momentum is just how fast we move towards a certain side, right? So for example, when I refer to momentum, I also refer to fair value gaps. Why? Because these fair value gaps, they essentially show you how fast we are moving towards one side. They are our indicator, if that makes sense. They're our indicator for momentum. So right here, once we start to create these bearish fair value gaps, there's a lot of bearish momentum at that moment in time. If we take a look at the higher time frame, I would argue we actually have a lot of bullish momentum at this moment in time. So what can we do? They contradict each other. Okay, so they need to align. So right here, on the 4-hour, what I would like to see is it's not necessarily about what we can potentially continue higher from. It's more so about what is preventing us from continuing higher. Because when you trade like that, what is preventing us from continuing higher, and we overtake the fair value gap right there to then continue higher right there, then you're also not dealing with those consolidations. Very important to understand. So what I simply want to see on the dollar right here, one of the possibilities, is that we sting back into this fair value gap. We might create a little bit of a lower retracement first. Again, whatever the most recent fair value gap for our fair value gap is going to be, that's where I want to see a sting into right there. Once we sting back into it, we have a rejection high right there. If we start running the rejection high like this, then we can continue higher again, because now the 4-hour aligns again with the daily time frame and we can simply continue higher, if that makes sense. That's the bullish option. The bearish option, so let's say that doesn't happen. Let's say we might respect the 4-hour fair value gap right there. This is not my preferred option, but again, we have to see both sides of the market to keep an open mind. If we do continue lower right here, and let's say we start disrespecting these fair value gaps, to keep continue lower and continue lower and continue lower. For me, it's going to be very important to monitor right here if we are respecting this fair value area right there, for example, like this, or if we are running the rejection low. If we are running the rejection low, I want to target these fair value gaps right here. I want to target these lows right there, if that makes sense. Very similar to what we had a little bit earlier right here. If we don't respect these fair value areas, we can target these lows. Okay, I hope that makes sense. If it doesn't make sense, feel free to let me know. We can discuss it more as well. So with that in mind, I want to take a look at, for example, a euro US dollar. Let me see. Let me remove everything that's happening here. Let's see. Let's see what we have. Okay. So it becomes very similar in that regard. As in, if we want to see the dollar continue higher right there, we want to see EU potentially continue lower right there. Currently, we are rejecting from that low. So what needs to happen is, for example, we need to overtake this 4-hour fair value gap to continue lower again right there. So for example, rejection low, create a rejection low, start running the rejection low to now continue lower right there as well, if that makes sense. So what is important? Again, I want to really hammer this in your mind, essentially. When we have this retracement and your thought process is only, what can we potentially continue lower from? So that's the usual question, right? If we are bearish, what can we potentially continue lower from right there? Then you're not asking the right questions, because if we have something preventing us from continuing lower, then the thing that will push us lower is not going to push us lower, or we're going to struggle, if that makes sense. So it's important we overtake the thing that is preventing us from continuing lower. Once that happens, we have now a clear path to continue lower a lot more, if that makes sense. So that's exactly what I will be waiting for. It's quite straightforward on EU as well. If we, for example, take a look at Australian dollar, US dollar, very bearish at this moment in time. So that also looks quite interesting to continue lower, to target these lows right there as well. For a GU, I'm not necessarily a big fan of this. I prefer an EU or an AU right there. New Zealand dollar, US dollar looks also quite all right to me right here to continue lower right there. US dollar, Canadian dollar to continue higher looks all right overall right here as well. Let's see. We are running into this swing high, so we have reached quite a target right there. Let's see. What is it? What would the next target be? And we've reached that as well. It will be this fair value gap right there. Okay. So we do start running this high right here. Potentially a new expansion candle. Could be interesting to target the next daily fair value gap right there as well. US dollar CHF, not that interesting to me. US dollar JPY right here. Let's go over the JPY pairs as well. For me, I would like to take a step back right now, the JPY pair. So again, where last week there was a clear opportunity because the volatility was just really good. Again, currently we're seeing this correction. So for example, on some of the JPY pairs, that correction is heavy, is very heavy right there. Very aggressive correction as well that we're seeing. So these JPY pairs, to me, at this moment in time, not that interesting. I would rather give it some time to develop, see what we want to do. If we, for example, on Canadian dollar JPY want to overtake, to continue higher again right there, if that's going to happen, perfect. Look for buys again. But in the meantime, I prefer to wait right here. It's not ideal to me, if that makes sense. All right, moving on. Indices. So this is where we get into the territory of the crash. Can you call it a crash? I'm not sure. I was thinking actually, what defines a crash? Is there a certain percentage that defines a crash in stocks? I'm not actually aware of that. So I'm not sure. Can you call it a crash? Probably not. It's just a large retracement right there. So right here, what we see on ES and NASDAQ is that last Friday, we see these, I'm just going to call them large retracements for now. Let's see, maybe I'm wrong. But right here, what is important to understand, if we take a look at NASDAQ and ES, okay. I want to, because when we have large price action like this towards the downside, of course, there's a lot of emotions that start to run. So there's a lot of thoughts, there's a lot of, what can we do? Can we continue lower? Again, your human nature starts to mess with you a little bit. Your psychology starts to mess with you. You can't see it very clearly. You become quite subjective, if that makes sense. So we need to approach this very objectively right here on the NASDAQ and ES to really understand what we can potentially do, lining out the different possibilities. Now, it's quite straightforward, in all honesty. It's not that difficult. So right here, we have this fair value gap that we are also retracing back into, right there on Nasdaq. Very similar on ES, we are also retracing back into the fair value gap right there. Okay, so the question is, of course, can we potentially continue higher from that? Or will we disrespect it to continue lower and to continue this arguably somewhat crash right there? Well, that becomes a question right here of zooming into the daily time frame. If we take a look at the daily time frame right here, we have a large expansion candle. There's no denying that, of course. Now, what can that expansion candle after a Monday, or I'm not sure, I believe after Tuesday, if Monday doesn't open up? Let's see. Yeah, we might get an early close. So then you have one of those candles that's essentially a Monday and Tuesday combined. I think might be the case. I'm not entirely sure right there. Potentially after Tuesday. So take that into account as well. But anyway, the point right here I'm trying to make is we might potentially create a daily fair value gap right there. If we create a daily fair value gap, that's going to be very important to monitor. So there's multiple things to monitor. Start at the week. Okay. If we create a daily fair value gap right here, let's say we have a third candle like this. If we retrace back into that and we continue lower from it, something like this right here, perfect. We might want to just continue lower right there and we can actually start targeting these lows right there, if that makes sense. Now, if we have the same thing right here, and instead we have something like this, where we create a rejection high and we start running the rejection high right here, then this to me is going to be interesting to buy. So for longs, again, this would be, in all honesty, my preferred option. But again, can you really have a preference? Yeah, you can have a preference, but again, whatever plays out right there, I'm going to act on it. So there's a third option right here, because we might have a scenario where Monday, maybe Monday for half the day, or Tuesday right there, is going to have a lot of volatility carrying over to from whatever happened on Friday right there, from Trump introducing tariffs. So if that happens, we might get a scenario where we already start running this low right here, where the candle opens up and we get something like this. When this happens and we already start running this low right there very early on, to me, that's going to be quite interesting already to start taking a look at shorts towards these lows, for example, right there, seeing how far we can potentially continue lower right there as well. Essentially three options. So I'm going to repeat them. The first option of what could potentially happen is this scenario right here, right? This scenario right there, where we have the candle open up and we just simply run this low already. We can already start taking a look at shorts right there. Okay. We also have this option where it might turn into a fair value gap. Again, even if we get the bullish option like this, there's still likely going to be a fair value gap, right? If there is no fair value gap, you'll adapt as well, but there's likely going to be a fair value gap, even though we might be very bullish right there, even though it's a tiny daily fair value gap. So right here, if we get a scenario like this, we have a fair value gap sitting right here. Okay. Second option could be that we do continue lower from it like this. We also start running this low right there. Or third option is the bullish option right here. We start running the rejection high from the daily value gap to then continue higher again. Those are one of those three. It's likely going to play out next week. You need to adapt, see which one of those is going to play out right there, capitalize on it. Now, what is important? What have I essentially just outlined? Is no matter what happens right here, I get involved if this weekly fair value gap right there is not preventing us from continuing lower anymore. I get involved if this daily fair value gap is not preventing us from continuing higher anymore. That's the important thing. So I'm just looking at what is preventing us from continuing lower, what is preventing us from continuing higher. Can we disrespect that? Okay, can I then look to get involved, if that makes sense? Okay, that is very, very similar, almost identical on ES right there. So that essentially the same thing. It's the same thing. So here we have this weekly fair value gap as well. Also the daily time frame right here, similar scenario. It's just going to be, well, of course, this low right there. Could argue it might be a little bit lower right there at that moment in time. It's going to be very interesting to see what we can potentially do. Again, I always mention you can have these suspicions, right? So for example, sometimes I have a suspicion that something is manipulation. I mentioned, for example, on Friday, I had the suspicion that this might be manipulation right there. I can have all the suspicions I want in the world. I can think everything that I want in the world, right? but you don't act on a suspicion. You never act on a suspicion. You only act on the facts that you're dealing with. That's super important to understand. So even though that I think this might be suspicion right there, what is the fact? The fact is that we are moving lower at that moment in time. That's the undeniable fact. So what we have to deal with right there is that if we do want to continue higher, make sure this is manipulation. We need to overtake these fair value gaps to then continue higher again. In the meantime, we can also continue lower and run this low right there. And that happens, I'm not getting caught up in my suspicion that I need to be right, if that makes sense. So that's quite important to understand, because oftentimes people will have these suspicions as well, but you will marry the suspicion. So no matter what happens, your suspicion needs to play out, if that makes sense. And that's a very dangerous game, because then you're going to be blindsided to all the different opportunities, if that makes sense, that might be out there. Very important to understand. So ES and NASDAQ, I'm going to be monitoring it closely right there. I hope that makes sense. Please, 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 if this doesn't make sense, please let me know, because I would love to dive into it more as well. Okay, let's see. That's essentially going to be quite similar for the indices right here across the board. Okay, if we move on to gold, let's see what we have. We have a couple of fair value gaps. We have, well, quite a lot of fair value gaps actually right there that we could potentially retrace back into. So what is important to understand? Gold is bullish, right? I don't think we have to discuss that very much. What is important right here is that gold will create that retracement back into those fair value gaps if there is something that is preventing us from continuing higher. So if there's nothing, I want to somehow find a perfect analogy for this, and I haven't found it yet. But if there's nothing preventing us from continuing higher, then what will we do? We will continue higher. It's like the only analogy I can currently think of a fish. A fish grows to its size that it has, like, right? So a fish in a very tiny bowl has nowhere to go. A fish in a very large bowl, in a river, in a lake, essentially, can expand a lot right there. So if there's nothing preventing it from growing, it will grow. If there's nothing preventing us from continuing higher right there, we will go higher. I hope that makes sense. So right here, what is the thing that might be preventing us from continuing higher? Well, at that moment in time, is this fair value area. If we start running this rejection high right here, we can continue higher. We discussed this during Friday as well. And on Friday, we actually mentioned right here, we can still see this deep retracement to then potentially continue higher. It's important to understand. For Friday right there, I'm not a big fan to get involved. Reason why is because it's more likely to consolidate, more likely to struggle a little bit, etc. I like to wait for Monday, Tuesday to then potentially look to get involved. So right here, this very similar to what we discussed last week. The moment this opens up is likely going to be quite interesting. Unless we open with a very large gap towards the downside or towards the upside. This is likely going to be quite interesting to look to buy throughout Monday as well, even though it's a bank holiday. So right here, we have this fair value gap. That will be our first stop right there, where we can potentially struggle a little bit. After that, if we start running the rejection high at the 1 hour fair value gap, we can continue higher again, targeting potential all-time highs right there as well. That's the first thing that I'm going to be looking at throughout this week as well. Gold right here, which is going to be quite interesting. Again, the moment we open up right there, I'm going to be monitoring it. All right, let's see. Silver, it's all right, silver. Just not necessarily a big fan of it right there. A lot weaker than gold at this moment in time. Okay. Crude oil, not that interesting to me. I want to dive into a little bit of crypto, and I want to dive into the stocks right here as well. Okay. We saw, well, Bitcoin is relatively all right. It's not the largest down movement right here on crypto. But like we discussed, we are coming from this all-time high. We sweep the all-time high essentially right here, and we get this large wick towards the bottom. What is going to be important to understand is, okay, if we do want to continue lower, it's likely going to be from this fair value gap right there to potentially continue lower right there. So if we do want to continue higher right here, can we overtake this fair value gap to then target an all-time high again? Something like this. If that happens, that's going to be quite interesting to then target higher again, target new all-time highs essentially. In the meantime, for me, that is waiting right here, seeing what we potentially want to do. Now, what I want to mention right here regarding crypto, regarding the stocks, again, for example, I had quite a lot of a bump in my portfolio as well when it comes to stocks. What is important to understand right here is I really don't mind these. Well, again, if you zoom out right here, it just looks like a retracement, arguably. For example, on new right there, it's not that bad. So right here, what is important to understand, if you still have a stock that you really like, that you are very confident about, not financial advice, I'm purely talking to myself, then for me, this is a very nice opportunity if you have some liquid cash to actually go into the market, if that makes sense. Now, I'll explain my approach a little bit better right here, how I would go about this. So for example, if you see these, struggling to talk, if you see these short-term retracements, these short crashes right there that we have, then what is important to understand, you might want to buy right there already to somewhat dollar cost average your way in, because you're still convinced of this stock that hasn't really changed, if that makes sense. So long-term, it still looks good. That's all right, right here. So you can do that. That's perfectly fine, in my opinion. But the first time I would do this would be with a smaller amount, personally. Then afterwards, because you might buy, and something like this might happen. We might just open up and keep continuing lower like this. So then eventually, in hindsight, you might have bought quite high right there. So it doesn't really help with dollar cost averaging your way in. So for example, if you take all your liquid cash right there and you put it everything right now into Shopify and it just keeps continuing lower right there, then, well, you bought at quite a high average price. It's not ideal, of course. So you slowly dollar cost average your way in. So for example, if we still continue lower like this, okay, so you buy again right there. Perfect. With small amounts. And then right here, we see something like this, where we slowly start to now turn around again. And this is very interesting. To now slowly dollar cost average your way in a little bit more aggressively. That's the way I like to do it right here. To then continue higher potentially towards the all-time high again right there as well. That's the way I see it. Again, for me, when there's a lot of fear right here, people don't know what to do, etc., etc. Most of the time, that is opportunity. That is simple opportunity, in my opinion. So imagine if you did the same right here with Shopify in 2022, right there. And this is what we have a whole stock strategy about. That's the whole thing. Retracements are arguably quite nice because it's more opportunity. The same thing, for example, right here. If ES and NASDAQ do create a deeper retracement right here, well, perfect. Because right here, once we created this deep retracement and we start to continue higher again, you have a couple of months that you have a super clear target in the form of the all-time high right there. So it's a very easy trading experience, if that makes sense. So if we create a deep retracement right there and we now have a very clear all-time high to work with and we start targeting it again, perfect. Because that creates so much opportunity later on, if that makes sense. And that's the way I see it right here. That's the way I see it. So that could potentially be quite interesting right here as well, depending on the stocks that you look at. All right, lot of stocks, buy low, sell high. Exactly. That's the point. That's the goal. It's the goal at least. Yeah. Yeah, that's actually quite funny when you mention that, because when I think of that, actually, because the whole thing, of course, crypto stocks. Could argue trading, but trading is a little bit different because you can also go short. You can also go short in stocks, etc. But usually people just invest, they hold it. So the whole thing is just buy low, sell high, right? But most people, they don't buy low. So most people are just looking, for example, at what has already been continuing higher right here to now buy. But you're buying at the highest point. You're arguably buying when it's overvalued at that moment in time. So when it does continue lower, now people get scared to actually start to buy. But this is the point that you do want to buy, because now you're buying low to potentially sell higher later on, if that makes sense. So it's quite interesting. It's quite funny, actually, when you think of it. All right, let's see. Give me topics, please. Questions, topics you want me to go over. Let's see. Let's see. Anything you want me to discuss, let me know. Solana. Let's see. The investor question. Okay, let's dive into Solana. Let's dive into the investor question afterwards as well. The how to trade for investors. Let's see. I'm not an expert when it comes to crypto, in all honesty. So if I select, well, for you, the wrong broker right here, then feel free to let me know as well, right? So I'm not entirely sure which one I should select, which one is the best or whatsoever. Okay. So right here, if we take a look at this. Okay, we have a lot of things coming in. Let me see. Let me first discuss this. Okay. Solana, what are we doing? Solana is not too bad, in all honesty, right there. Not too bad. Okay. So we are still struggling with this bearish value gap. Anything I'm missing on the monthly? No, don't believe so. Okay, so we are still struggling with this weekly bearish fair value gap right there as well. Let's dive into the daily time frame. Okay. Looks quite bearish at this moment in time, but that can change quite fast. So right here, we have a beautiful bearish order flag against us. Again, we could potentially see a retrace back into it right there to continue lower from it. It could also be very interesting right here if we do want to recover, continue higher again. Right here, depends a little bit on what you think of Solana as well. I'm not sure if it's a good crypto coin or whatever it might be. Okay, so if we do create a rejection high right here, and this is the rejection high, and we start running it, let's say right here, that's going to be your area of opportunity right there, if that makes sense. Towards the downside, so towards the bearish side right here, your area of opportunity, let's see, fair value gap right there, also fair value area, it's going to be a smaller area of opportunity in general. It's going to be more like this right here. Let's see what we have on the lower time frame. But potentially if we overtake this bearish fair value gap right there, to then continue lower right there. It's going to be the bearish area of opportunity, if that makes sense, for both sides. How do you start trading for investors? So what I think is very important to understand is when you start trading for investors, well, how do you even get to that stage? Is at first, my advice would be start trading for prop firms a little bit. The prop firm experience is quite similar to actually trading for investors. Now, I don't get banned. I don't get banned by my investors. Don't worry. I might if I perform very bad. I don't all of a sudden get banned. But there's also a reason why I don't get banned, if that makes sense. So the experience is in a sense quite similar because the risk management at its core is just universally, it's arguably very similar. It's the same thing. You need to have good risk management, not risk too much, etc., etc. So for example, if there's traders out there that risk their whole daily drawdown essentially when it comes to trading for prop firms, and they get banned for these prop firms, I'm sorry to tell you, but you're not going to attract any investors. It's just not realistic, because if those prop firms can't A-book you, then you also can't trade with investor capital, if that makes sense, right? So it's arguably a very similar thing. So that's important to understand. So you can start off with prop firms. Now, once you start off with prop firms and you pass your evaluations, you get your payouts right there, and slowly you get the ball rolling right there. Post something on social media. Post something on social media, right? So most of, for example, again, I get a lot of offers for investments as well through social media now, where it's through email or people in the Discord, etc., that offer me essentially just, hey, do you want to manage this capital? Now, of course, then you also need to take a look at the legal reasons, etc., what is happening, etc., with your broker, and do you even want to trade for people that you know? Or for people, not that you know, for people that might be your students, for example, a little bit different. But social media, post it on social media, start creating, and even just payouts, even just passing evaluations, that's already a track record, right? So I think a lot of people overthink as well what a track record might actually be, where they think you need 2 years of profitability in a specific broker, etc. No. Listen, what is an investor? What is an investor at its core? An investor is a person that has money. That's it, right? So if a person is willing to give you that money, that's it. So if someone else doesn't really determine what is a valid track record, if you can convince the investor with your track record that you might have, even if it's just a couple of payouts, that's it, right? That's all you need. So that's quite important to understand. And then it just becomes about exposure. For example, what you could also do is go to events where investors might be. So for example, where is the money? Well, think about Think about real estate. If you have an event that's about real estate, there's a lot of real estate investors likely going to be there. I'm sure they wouldn't mind if they are very wealthy as well. I'm sure they wouldn't mind to give you a chance or an opportunity, etc. And then it becomes about approaching it the right way as well. So somewhat building that network eventually, if that makes sense. And the way you go about that is, of course, first, you need to somewhat prove yourself to investors as well. So what is proving yourself? Again, I need you to understand, proving yourself to investors, etc., proving yourself in general when it comes to trading, it's not about, I'm going to find an investor and I'm going to make 40% profit the first month. No. That's the worst thing you could do. Because again, the more volatile your equity curve is, the harder it is to actually invest in you, the harder it is, for example, also for a prop firm to A-book you. Because when you have a very volatile equity curve, so what that means is if you make 40% right here, it's all fun, but 40%, the first question that a lot of people are going to ask you, how much did you risk to actually get there? So 40%, you might have risked a lot to get there. So next week, it could be something like this right there, because the risk is just so much. And the first goal of an investor, again, the first rule in trading is to protect what you already have. When you protect what you already have and everything that's added on top of that, what you make extra, perfect, great. You're beating inflation. The investor is very happy with you, if that makes sense. Okay, very nice. So right here, that's the first goal. So it's a lot of emphasis when you start approaching investors as well. Can you show the risk management? Can you show I'm not going to lose your money? And anything added on top of that, very nice. I hope that makes sense a little bit. I hope that makes sense. What is your minimum requirement for an investor? Well, it depends a little bit. A minimum amount is usually 6 figures. But what is important for me is a little bit where you are from, what the legal restrictions might be as well. So, because that's quite important to see how we can actually legally handle it, etc., etc., etc. So that is usually more important for me than the actual amount that you have, if that makes sense. Let's see. I see a question about AI. I like talking about AI. Let's see, how will AI affect the Forex industry? Is it a risk? For now, no, not necessarily. No. And when I assume you're talking about, for example, will they potentially replace us traders? Listen, if I ask ChatGPT what the weather was yesterday, it still doesn't know. It still gives me the wrong answer. Sometimes I ask for the standings on ChatGPT or something, the standings that I want to know about, and just gives me the blatantly wrong answer. It's very funny. So for the next couple of years, I'm not too worried about it, in all honesty, on a retail level. So what I mean by that is AI, of course, yes, it's going to be very intrusive, as in it's going to have a lot of impact on the world as well. But for now, it's a language learning model. So what that means, it essentially, it simulates how we talk, how we write, how we do things, essentially. So it needs human input a lot as well. So on a retail perspective, a lot of us are profitable because of the experience that we have, the intuition that we have, etc. AI can't really impact that, if that makes sense. So for example, it can take a look at your journal and understand the larger patterns that might be forming at that moment in time. That's very useful, right? That's very useful. But other than that, a lot of the experience, that 20% of your trading plan is not going to come from AI, not just yet, at least. So that's what I think is quite important to understand. That's, again, I always see it like this, and our brains created AI, right? So there's a hierarchy that I think is very important to understand. So don't underestimate yourself, because your brain, a very similar brain to yours, created AI, if that makes sense. So AI is inspired to whatever is above it, and that's humans, if that makes sense. So for example, when AI creates music, and the music sounds very good, that's because humans made it before, that made it sound good, and AI gave it a twist, for example, that already was aware of it. So it can't go higher than this. AI can't all of a sudden sit here and magically invent certain things, etc., etc. So it can't go higher than the brain, if that makes sense. So it can never outcompete the brain, if that makes sense. Of course, in objective things, etc., yes, it will be a lot better than that, because it can just do that in a split second with the objective data it has, etc. But other than that, it's very hard for AI to outcompete the human brain, if that makes sense. And then you could argue, well, why is that? I don't know. Pick your poison. Whatever you believe in. It's very interesting, though. Very interesting. That's the way I see it. So for now, I would say don't worry about that too much. I think about that actually quite a lot because I feel like, I feel like traders and in general people, it's a very human thing to do. When you want to do something and you, for example, a lot of talk, that's not necessarily the case anymore. It's quite interesting actually, but it used to be the case that people always ask you, will the concept still work next year? Will this still work next 2 years, etc.? Of course, I can't give you a guarantee, right? But it's very important to understand that when we talk about that, oftentimes it feels like people are trying to procrastinate the actual progress. So they're trying to find reasons as to why to not do something. For example, the other day I saw also a tweet, if prop firms disappear or if this happens, if that happens. Again, don't focus on the if, just focus on the now. You're not sure what's going to happen in the future, but those ifs, they just give you a reason to procrastinate, if that makes sense. Oh yeah, but if this happens, if AI takes over, etc., just focus on now. Focus on what you can control now, if that makes sense. That's very important in my opinion. You ever use Darwin X? No. For my investor, the percentage split I get with my investor compared to Darwin X is not really worth it. So I need you to understand, because again, when I talk about my investor, for example, it sounds almost like this mystical character is my investor. Sounds quite funny. But when you're trading with Darwin X, usually you get a performance bonus. So for example, you get a performance bonus of 15%, 20%. And it's quite normal in the investor world. I just have almost like a prop firm split with my investor because I personally know my investor as well. So it's a little bit easier to negotiate the terms, etc., etc. So what I think is very important to understand, when you focus, for example, a lot of people want to focus on Darwin X. And that's beautiful. That's beautiful, right? I quite like that as well. But what I think is important for your journey, for your efficiency, Darwin X is not really going to be worth it until you do reach, let's say, 8 figures. Why? Because the performance split, the performance bonus is quite low, where even if, let's say, you have 10 million in capital and let's say you make around 10%, you're going to be left with, let's say, 100,000 US dollar. There's nothing wrong with that, right? That's life-changing money. But I'm just trying to tell you right here that through prop firms, at the start, you can achieve that a lot easier, if that makes sense. So then eventually, of course, if that's a sacrifice that you want to make and you say, hey, I'm in here for the long term and I already want to use Darwin X right now to start building that, those investors to, you think it's worth it even to at the start, perfect, right? That's absolutely perfect. I encourage you to do that as well. That's beautiful. But other than that, the way I see it, at the start, it's usually better for most traders to start off with prop firms. It's going to give you more capital, more faster, payouts faster, the splits are better if you stick to the rules, the risk management rules, etc., and then potentially scale into investors. And even you can, if you have been doing that with prop firms, you don't even need Darwin X anymore to find investors, if that makes sense. This is the way I see it. But honestly, I don't mind Darwin X. I think it's overall beautiful, beautiful program. We're going to watch the Flying Dutchman this week, the USA Grand Prix, the USA Grand Prix, F1. Nice, 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 nice. Enjoy, my friend, enjoy. Let's see if no, I don't think so. But let's see if he can still catch up with Piastri. I don't think so. But let's see. Will be quite fun. Will be fun. When you ignore fair value area is what prevents us from going higher or lower. I mean those order block fair value areas. Yes, I know what you mean. Most of the time, in the MMT, I tend to ignore them a little bit less than, for example, YouTube. Why? It's a little bit more, how do you say? A little bit more friendly, if that makes sense. As in, you can understand a little bit better what we're looking at. For example, if I now start to include a lot of fair value areas, it might be a little bit confusing, if that makes sense. But other than that, a lot of these fair value areas that I look at, for example, on the left, they're most of the time also already mitigated. So I don't really pay attention to them a whole lot. So for example, on Solana, actually, here I do, which I think is quite important, because here there's quite an obvious fair value area that we have right there. But the ones towards the left, most of them are mitigated. Or this one, for example, we have that one. You could mark that out. Doesn't really matter in comparison to the fair value gap. That makes sense. Oh, it was a question to me. I'm sorry. I read that wrong. I'm sorry. No, I won't go watch. No. No, I won't be there. No. I was thinking actually of maybe going to the Brazilian Grand Prix, because that one is already quite exciting. But then I was thinking, if you go to the Brazilian Grand Prix, and most likely it might rain, and you're sitting there in the rain, and you're not going to see a whole lot, but the experience might be better at home. If that makes sense. If AI takes over and trades everyone, will get rich, and yeah, that's not going to happen. They won't allow it. That's also true. Yeah. I'm very curious how that will happen with AI in general. The curve, the process curve. Let's see. How do you validate a trade plan? That's a good question. Okay. How do we validate a trade plan? I need you to understand, at the start, a trading plan doesn't really need to be perfect or anything like that. Now, the first thing I look at in a trading plan is it in a nutshell clear? So can you send me your trading plan and I understand it? I understand what you're waiting for, if that makes sense. I could arguably repeat it. Now, the way that doesn't work, or the reason why that doesn't really work, so for example, I can give you my trading plan. I have given you my trading plan already. You might be having a difficult time to exactly copy what I'm looking at that moment in time. That's because of the 20% part, the experience part. But what is important to understand right here is that when we talk about a trading plan, the first thing I look at is, do you have a long list of rules? Because when you have a long list of rules, throw it out the window. Because that usually means that you don't really know very well what you are waiting for. And it's not too clear. And what tends to happen is that long list of rules, you're not going to follow it, etc. I think we've all been there. When you at the start creating trading plan, you say, well, what is the plan? Well, might as well just start writing down rules, what I'm waiting for. So then you start writing down very specific rules. The monthly needs to exactly reject from this if the weekly is aligned with that, etc. And it becomes almost too much, too objective, if that makes sense. It's not going to work. So what you want to do is you want to limit it a lot. So for example, a good trading plan has all 5 of the foundation levels. Number 1, first thing you do is bias. Find the concepts that you can find your bias with right there. Number 2, right there. You go on to narrative right there. Narrative, context, very similar. Let's put them in one actually. Context is essentially, for example, what can we continue higher from, or what is preventing us from continuing higher. That eventually creates an area of opportunity. Then number 3, in that area of opportunity, you're going to have an entry right there. Then number 4 is your risk management right there. That's essentially what it consists of. A good trading plan. Every trading plan has these 4 essentially right there. That's important to understand. Can you explain your mentoring and subscription? I'll briefly explain it. You can also go to the website tradingmmt.com. It's a link in the description as well. Light is more you're on your own. You have less content. Masterclass is, for example, you join the Discord. You can talk to me. You can talk to support. You can join the live sessions as well, etc. You have a lot more handheld support, if that makes sense as well. And you get a little bit more content, if that makes sense. And that content, for example, is the extra clarity module. So knowing when and where you look to get involved, that's really what it's focused on. So essentially giving you a lot of clarity, what you can expect, what you need to look at, etc. To create a plan that you can essentially just increase the volume and scale to large amounts of capitals, to payouts, etc. That's the goal, if that makes sense. Let's see. You mentioned look at my Slio, but I don't believe that I didn't put a Slio in the description. Which Slio do you have? Zero to Hero was the best in light. Nice. It's meant for students. Yeah, it's meant for students. After learning concepts, I don't feel like putting hard work. Is it how it feels? Not exactly sure what you mean. What is important, what is quite an interesting transition in trading, is that when you learn, for example, how to structure everything. So, for example, what we help with in the MMT as well, just an example, is how to structure everything. So you take all these different concepts and you put them together. For example, if you have a bumper, you have a wheel, you have a steering wheel as well, you have a dashboard, etc. You have all these different components. Eventually, if you know how to put them together, it becomes a car. Quite cool. Okay, if you know how to put all these different concepts together, you have a trading plan, etc. that you can use to scale, etc. And that changes it a lot, because then essentially it becomes from this very exciting learning journey to quite boring. So something I do want to mention is it's supposed to get boring. Trading is supposed to get boring, where you know exactly what you're waiting for. And that's very interesting, because sometimes the learning journey gives you so much dopamine, and it's like super interesting that you're constantly learning all these different things, but you're not getting anywhere really. Whereas when you really start to make progress, it gets quite boring to a certain degree, if that makes sense. It's very different from the learning journey. So you might start craving that learning again. So you might go back to learning. It's quite important to recognize. I'm from the Netherlands. Yes, correct. This platform name, this is TradingView. If that's what you meant. Congratulations, my friend. Congratulations. You're first funded. Keep the focus. That's important. Keep the focus. Let's see. So when I ask a question, how to enter in an area of opportunity that's very volatile. Yes. So that's a good question. Logically think about it. What I think is very important. If we have an area of opportunity, I'm going to mark this out where I took a trade as well, right here. We have this 4 hour value gap. If we do overtake this 4 hour value gap right there, come on, there it is. We need to run this rejection high. Okay. So you'll notice by the time the main target I had was this all-time high, right? By the time we reach that high, well, it's already too late on the 4 hours to now get involved, if that makes sense. So what is important? That's actually the point. Because the reason why we run fast, that's the whole point. That's why we look to enter right there, if that makes sense. So the reason why we want to get involved in the area of opportunity is because that's where price runs. So think about that logically, because then it makes a whole lot of sense. So then your entry also changes, right? So think about it. When you then wait, for example, for a sting back into a fair value gap, so a retracement, when you want to see price run right there, isn't that contradictory to what you want to see at that moment in time, if that makes sense? So right here, if we want to continue higher fast right there, then why would we wait for a retracement back into a fair value gap? So what do we do instead? You use expansion candles. So for example, right here, the entry I used is an expansion candles. What they essentially are is just more bullish candles. That's it. So what can potentially create a fair value gap as well. Now right here, you'll notice this, for example, is an expansion candle. And the third candle creates the fair value gap. So the second candle of a fair value gap is an expansion candle. This right here is arguably the first candle. That actually was my entry right there, because this is based more on two candle rejection as well. But this, for example, this candle right here, this next candle right there, this is also perfectly fine entry. Expansion candle right there to continue higher. So then price doesn't need to retrace back to these fair value gaps to already continue higher. Now, you can cover your stop loss like this in the case it does right there, worst case scenario, to then continue higher right there, if that makes sense. But that's how you would go about it. I hope that makes sense. If it doesn't, feel free to let me know. I see quite a lot of beginners. It's quite interesting. Quite interesting. If you want, you can follow the A to Z guide here on, it's a playlist on this channel. So if you go to my profile, you go to the channel, A to Z guide, it's just a free playlist. You can also go over if you're interested in that. Let's see. Except trapped order flow, what other situation makes price low probability? Momentum. It's a lot momentum. So what I think is very funny, because you can really strip the whole thing down essentially to momentum. It's very funny. It's let me explain it. So what is momentum? Again, momentum for me is how fast we're moving towards the side of the market. So for example, right here, lots of bearish momentum, right? It's undeniable. We can't miss it. What is a trade? A trade ID, what are we doing, for example, right here? When I took that buy right there, all I'm essentially doing is waiting for the momentum to align bullish on all these different time frames to then look to enter. That at its core is what it comes down to. So for example, right here, if you have, so that also means if you, for example, have this bullish fair value gap and we have a lot of bearish momentum coming back into the fair value gap right there, could argue stepped order flow, but that means that momentum is going against you. So that makes anything inherently low probability. So for example, right here, if we want to buy right there, what am I essentially waiting for? I waited for the daily to have bullish momentum, something like this. 4 hour to have bullish momentum. 1 hour to have bullish momentum. 15 minutes right there to also have bullish momentum right there. So this is quite important, because when you start thinking about this, for example, a lot of people enter in a fair value gap right here, and they wait for a retracement back into the fair value gap. And then here is where they look to enter right there. But what has recently been happening? You just have a whole lot of bearish momentum against you. So what at its core is an entry confirmation? You could argue it's an entry momentum. Sounds a bit silly, but you could argue right there, it's just waiting for the momentum to shift bullish right there. That's all order flow is. That's all an ST is right there. So it's momentum to go in your favor again, and then look for the trade right there. And once you confirm that the momentum is in your favor right there, it becomes very high probability. That also means, to answer your question, when you have momentum going against you, every time you have momentum going against you, it's likely low probability, and it oftentimes leads to consolidations as well. If that makes sense. If that makes sense. Mr. Bob, so Messi or Ronaldo? I don't really have a preference, to be honest. Messi has hurt me a couple of times in the World Cup with the Dutch team. That handball, I will never forget it. I'll never forget that handball. That was as corrupt as I've ever seen. But other than that, I think overall Ronaldo is to me, it seems like he is the more hardworking guy. Messi is the more talented guy. Other than that, I don't really think there's one really standing out a lot compared to the other. Let's see. Oh. Nested fair value area is essentially the smaller fair value area that you find in a bigger one. So for example, right here, this is the larger fair value area that we have. So this is also a fair value area, but it's a smaller fair value area inside the larger one that we have right there. So it's a nested fair value area, if that makes sense. Now, ST oftentimes is not really enough to shift the momentum. Ron Jans or Louis van Gaal? Personality, Ron Jans. I think Louis van Gaal is quite an interesting character. So I think if I had to choose one, I would choose Ron Jans. But probably for the knowledge, I would probably go for Louis van Gaal. All right, how can I handle fear and be confident in taking a trade? A very good question. Very good question. So what is important? When I go to you, listen, you might know me from the internet right here, but what is important is if for example, a stranger approach you from the street and asks you to do a whole lot of things, are you going to trust that person? You're likely going to be, it depends where you are, of course. Your environment then determines your trust. So for example, if it's in a neighborhood here, I might trust someone a little bit more than I go into a very different neighborhood, etc. And to then trust someone. So what I'm trying to get at right there, confidence, trust needs to be somewhat earned, if that makes sense. You don't have trust from the start. So what is important, when you start taking trades with a fresh new trading plan, there is no trust. There is no confidence right there. It's just seeing how can you consistently improve. Now, what you start off with right here is you start off with quite a trading plan that's quite naked, as I like to call it, as in it's not great. It's not great. So you slowly start to improve it. Now, because you start to improve it, your confidence also starts to increase, if that makes sense. Your trust in that starts to increase. So that's very important. With time, essentially, like Anil mentioned right there as well, that's when you gain trust. That's when you gain confidence in it. That's very important. Yeah. Let's see. For an area of opportunity, swing high and swing points, and for value is enough, for sure. Yeah. For sure, for sure. I'm reading Reality Transurfing. What's your opinion on that book? Thank you for asking. I love that book. It's the best book I've ever read in my life, personally. It's a really good book. A really good book. It's changed my life, my mindset on a lot of things as well. So if it's arguably the only book that I consistently read every single year. Reality Transurfing. It's a very thick book, difficult as well, but it's beautiful. It helped me so much, so much. Beautiful. I like it a lot. Let's see. Yeah, it is difficult. It is difficult. Like you probably need to read it a couple of times or read pages again and again to understand it. It's essentially how you can somewhat change your reality, but then based on quantum mechanics. So the author, Vadim Zeeland, was a quantum physicist, and he just has this book where you essentially use your mind to somewhat change your reality. It sounds very, very, very hippie, like when I think about it. Arguably it is right there, but it's a nice book. I like it. Let's see. Do you look at any other time frames besides the one on your list? Sometimes. So once a year, for example, in December, in January, I might take one look at the yearly time frame right there, just to see what we're doing, see if I'm missing anything obvious. For example, on stocks as well, I like to sometimes take a look at the yearly time frame right there. Again, it might change the scenario a little bit right there, but other than that, I don't really focus on any other time frame right there. No. Perfect, Mr. Bob. Yeah. Okay. Let's see. All right, it happened so many times. Where is it? Let me see. It happened so many times. My entry fails because when rejection high breaks, suppose on the 1 hour, and I take entry on the 50-minute price sweep and hit my stop loss, and they go in the right direction again. Patience. So oftentimes I'm sorry for such a simple answer, but that is also a very simple solution. So for example, you already somewhat answer your own question. You mentioned right there, oftentimes I enter on the 1 hour, 1 hour area of opportunity. I use the 50-minute, it then still retraces and then continues higher. So you enter too early, if that makes sense. So for example, you can also stay on the same time frame, wait a little bit longer right there, and then look to get involved. So that's oftentimes patience, a little bit waiting. That makes sense. I would love to take a look at Alibaba stock. Well, so far it looks very good, Alibaba. I quite like it. So ever since, I believe it's Jack Ma, his name. I believe he's the founder, CEO of Alibaba. I'm not sure what exactly happened. I think he went into hiding or something. I'm not entirely sure. But ever since that happened, this stock has been low. But right now, there's finally some signs of life right here. So this looks very good, actually, in my opinion, to continue higher as well. It looks quite nice. I quite like it. I like it. Let's see. I will. Yeah. I won't forget. Don't worry. All right, my question is, when can we expect the market to move from the first line of defense towards the overlapping defense and eventually the last line of defense? It's a good question. When, for example, this is also a lot of a momentum question. So for example, right here, if we take a look at the dollar, when we have a lot of bearish momentum at that moment in time, it's more likely that we are going to, instead of the first line of defense, reach for the overlapping defense right there. Now, oftentimes you also notice it. If we disrespect the first line of defense, we can still retrace back into the overlapping defense right there as well. if we disrespect the overlapping defense, last line of defense actually becomes the target right there as well, if that makes sense. It's quite straightforward. Let's see. Let's see. Why is it that you don't notice mistakes when entering a trade, but you see them after it hits stop loss? The human mind, such a beautiful thing. What I also think, it's quite an interesting question. What I also think, oftentimes that same things that you, for example, let me say it like this. When you enter trade, what is the goal? The goal is to make profit. That's also the hope, ideally. So you're more susceptible to start looking for reasons as to why this trade should play out. So for example, one of the best things you can do, in my opinion, is look for reasons why the trade might not play out. So if there's a whole lot of reasons why the trade might not play out, then you don't take the trade, if that makes sense. And then you can somewhat prevent that, if that makes sense. And it's just a coping mechanism, essentially, because you want to take a trade, you want ideally to be a winner, so you start looking for all the reasons why it might play out. And then only after the fact, when it becomes a loss, for example, you see, I missed that, because you weren't paying attention, and you weren't trying to pay attention to it, if that makes sense. That's important. When to buy gold, like I'm asking for to buy physical gold, does it have any chance to get a lower price? It will go lower, gold. Like we will have a retracement, most likely, of course. I can't see in the future. But overall, gold is arguably one of the most stable things that you can buy. So when to buy gold, that's up to you. It's up to you. You can also buy a gold ETF instead of physical gold. I prefer that personally, but if you want to buy physically, then you can also do that. Let's see. College or no college? Okay, we're getting into dangerous territory here. College or no college, and the concept of essentialism. Okay, my college requires 67% attendance or year back. My advice would be, unless you have something else that is already proven, somewhat the concept of you can live from it or there's a future in it, I would advise college. So I'm sorry. I'm sorry. I'm not here to advocate for everyone. Let's not go to college, and let's because again, for some people that might work, but usually that tends to work when they have something proven to already work, if that makes sense, besides college. So then the choice becomes a little bit easier, if that makes sense. But if you don't really have that, college, it's your best option. And even just getting a degree. It's tough right now, but just get a degree. So you always have something to rely on, at least. And that's coming from me, but again, I don't have a college degree. But what is important to understand, I had something else. That's quite important to understand. So for a lot of people that won't work, if that makes sense, it's quite important. I was at homeschool. Interesting. That's quite interesting. Nice. You mentioned what worked on 2025 couldn't work on 2022, 2025, but how are the concepts we use the same? Why it won't work in different times? It will likely work. So I mentioned, for example, on Friday, I believe it was Friday, because the question was, listen, what I don't like is if you gather data from 2025, because that data is likely going to be quite different, because then you're somewhat optimizing for 2022, if that makes sense, and you're going to try to use it in 2025. It's like a little bit, that's like me trying to optimize for the NBA in 1940 and now trying to get into the NBA in 2025. Like, oh, they're all of a sudden more athletic. Oh, they can actually handle the ball quite well nowadays. Like, it doesn't make sense. It's quite different. So that's why I think there's the general terms. For example, the same in my basketball analogy. If you play good basketball, it's the same thing, right? You can still make it, if that makes sense. But other than that, the details, etc., will be very different. So that's why, if that makes sense. Let's see. I'm bad at socializing. Any tips? No worries. No worries. I wouldn't worry too much about that. You're just who you are, my friend. You're who you are, my friend. Don't worry too much about you need to socialize or anything. You can get very far in life without socializing. And if you want, you can slowly practice it. Just slowly start talking to people. Mainly start being generally interested in people. Start asking someone questions, etc., about their life, etc. Becomes a lot easier because then you just come into a flow, if that makes sense. Let's see. I have no idea what quadrant is, my friend. I'm sorry. I have no idea what that is. I don't use it. I don't really use it. Well, I don't use it at all. I have no need to use it, if that makes sense. Yeah, exactly. For example, flow, how we might be running a high, tiny details, if that makes sense. But the general guidelines will still be very similar. How many monitors? I have, well, 2. I use my iPad right here to read the chat that we have, essentially. But other than that, when I'm trading, I usually just have 1 monitor. The other one maybe has Discord open or whatever it might be. But other than that, because I used to have, for example, a very wide screen, and I used to have also then an extra vertical screen, if that makes sense. And I just noticed that it was not really adding anything. It was more so to distract me, because then I started, for example, playing a video or something else on the other screen instead of just focusing on the one thing that really matters, if that makes sense. Let's see. No worries. The desk tour. It's quite straightforward. Let me see. Here, there's the other monitor. You see right there. There's the other monitor, and this is the rest of the room, essentially. If that makes sense. The rest of the office. That's about it. Let's see. All right, team. Thank you, SPY. Thank you. All right, team. I'm slowly going to end it here. It's nice, a morning session. Very nice. Have you ever felt like maybe this is not something for me? I think with anything, if you have a setback or anything, it always crosses your mind, right? That it might not be for you. I tweeted yesterday, or the day before, Friday. I'm not entirely sure. Friday, I believe. From someone in the MMT that was also like going through it, essentially, and now doing very well. What I think is very important to understand is sometimes it might also be the case that it just isn't for you, if that makes sense. So to also take a look at the reasons why did you even start trading, etc. Is there somewhat of a passion there, or is it just a means to an end, if that makes sense? Because if it's just a means to an end, for example, it's just for you a vehicle to get to a certain destination, it's not always the best thing, if that makes sense. So sometimes it might also be the case. But other than that, if there's a real passion for you to learn, and for example, you really miss it when you don't think about it. When I don't think about trading a couple of days, for example, I'm on vacation or holiday, then I really start thinking about trading. It's like, I quite miss it actually. And that tells you there's something there, in my opinion. But it happens. I've also had it, yes, for sure, with anything. Did you get payouts? I can show you my account, actually. I'm ready for a payout right now. Actually. Let's see. I'm currently, I'm doing quite a lot of things. So I'm juggling quite a lot of different accounts as well, which is not ideal, in all honesty. So the FTMO account that I have right here, which is ready for payout, It's just there. It's just there. It's just here. This is it. I can claim that reward if I wanted to. But again, it's not my main account. And on top of that, I don't want to focus on this too much right here. So last week, I didn't take all the trades right here because I've also been focusing a little bit more on futures. Reason being is because it just aligns with what I'm doing better right now. Favorite vacational place? I'm not entirely sure, to be honest. I quite like, depends. I quite like Italy. I like Italy a lot. It's a very, very nice country. Very nice country. Let's see. Yeah, pipback is still a thing. So if you still go to pipback right here as well, let me see. Pipback is still a thing. We still run it. We'll give a little bit more updates as well on it. So this is just essentially pipback.com. I'm the owner of it as well. Pipback right here. We still run it. Yeah. Let's see. I speak a little bit of Italian. I used to speak Italian a lot more, but it's faded right now. Toscana, yeah. Yeah, beautiful, beautiful. Absolutely. All right, team. Thank you, everyone, for being here. I'm going to end it here. Thank you, everyone, for being here. Let me see. Actually, I was not full cam. This is the office right here. It's quite straightforward. All right, there. That's it. Of course, the essential right here. The basket right there. I can't point it. There it is. All right. Thank you, everyone, for being here. Have a great rest of your weekend. Great rest of your Sunday as well. Yes, I would actually, TJ. Yes, that is something I would like to do. Yes. Thank you, everyone, for being here. Thank you for the great questions as well. Really appreciate it. And then I'll see everyone. Potentially we could do it tomorrow, but I'll keep you updated. Again, if you are in the Discord, free public Discord, if you follow me on Instagram, you're in that group, or Telegram or anything, I'll just update you there as well. And then we'll see. We'll see. And definitely, again, Friday, 9 a.m., Sunday, 9 a.m. New York local time as well. Make sure to be there. All right. Have a great trading week if I don't see you, or if I might see you in the MMT later on. Thank you, everyone. Take care. Take care. I'll say it. All right, perfect. Thank you. All right, perfect. Thank you. Okay. Bye-bye.